Okay, the live trading recording that I'm about to show you is a gap up short on CCCC. In this trade, I messed up my executions and made a couple of mistakes in which you're gonna see really soon, resulting in almost a $5,000 loss. However, the key reflection here is that my P&L could have been a lot worse if I did not cut my losses quickly and acknowledge my mistakes. Okay, here we are on TradingView. We're looking at the daily chart for CCCC. The day the trade took place was on this particular day over here. You can see this thing literally ran up from $1 to $2, then from $3 all the way close to $6 on this long breakout candle. And next day I traded it was this one. So if you look at the intraday chart on this particular day, you can see pre-market, this thing had already gapped down a little bit from prior day's close area around 560s. And a lot of times when you have a first gap down day on a stock, small cap stock, that ran up for multiple days, 1, 2, 3 days, and you have a gap down pre-market, a lot of times that signals that this might be the start to the end. So my plan on this particular day is that with a gap down pre-market, I'm gonna use that 550s as my risk area to short into, and potentially I'll get downside all the way to 430s, potentially lower to 370s. Like I said, it's very extended, so a lot of downside to go for the shorts. And then that area around $5.50 to $6 is going to be my risk area. Again, that $6 came from the highs from the day before. So you're looking at the trades I did on that particular day right now. You can see CCCC, pre-market's already kind of started gapping down. Again, it's 9/11, so the market hasn't opened yet. You can see pre-market with a gap down. I'm scaling in slowly, 1,000 shares, averaging about 540s. I rarely trade pre-market, but this is one of the few setups that I'll take a dabble and start in early pre-market. Okay, fast forward now to the open. You can see I have an average of 1,500 shares short, the 534's average. You can see at the open, very volatile. This stock is a low float stock after all, so you gotta have to expect this much volatility. So you can see prior day's close is that 550s area we talked about earlier, and now we're kind of hovering around like 510, 520s mark. Like I said, my risk is going to be around that 560s, and yesterday's high is around $6. So that 40-cent range, I want to price in that risk because the stock is very low float. You can see at 9:33, 3 minutes after the open, the stock gets a little pop, testing that pre-market support area, 520s. I'm still holding on now to 3,000 shares short on CCCC. You can see at the bottom window here on the 2-minute chart, CCCC, the stock is getting bought back up. Testing previous day's close. Again, my risk area is $5.60, $6. So if that breaches, you're gonna see me starting to cut my losses. You can see I added a little bit up here at 540s-ish. I added 1,000 shares or so. Again, I want to be cautious for both long and short. So you can see I'm starting to cover. I covered just a little bit, realizing some of that loss at 550. So you can see I realized about $200, $300 worth of loss. In hindsight, I should have covered way more. I'm still keeping 5,000 shares because I added a little bit up here thinking that was the clear out. In hindsight, that was a mistake, definitely. I added back way too fast. So the mistake here is not cutting my position faster. Yeah, like if you look at this much volume, this is a good review session for me to review my mistakes. You can see this much volume being traded on a stock that's low float. I should have trimmed, like most of my 90% of my position right around here. So now 560s, you can see it skips to $6. I wanted to cover, but I was way too slow. So I covered up here at, this is like 590s. So I covered all of it, all the way up here. So for a second, it looks like, I covered at the top. I just realized about $3,200 loss on this stock. So I was out all the 5,000 shares. Definitely not very fun. And you can see I was thinking, okay, maybe that's the top. This is where I definitely made a mistake. Second time now of adding back to my position way too quick. So you can see $6, I saw like some potential rejection. That's why I added back in 2,000 shares up here at 584. Again, don't do this. This is a bad trade. Okay, so you can see now at 9:43, I covered all the short on CCCC once again, realizing now tallied up to $3,500 of losses. Not fun. I definitely overtraded because you're gonna see I'm gonna retry this short again. That's a tricky part with these like small caps. You can say I just shorted another 1,000 shares at 580s because if for a second it looks like that $6 was going to reject. Stock squeezes through $6 to $6.13. I'm still stuck short 1,000 shares. Thank God I got out of the 3,000 or 5,000 shares I had earlier. I just have a starter of 1,000 shares left at 587. Average is painful to watch. You can see stock squeezes through 610s, and I covered right here. This is definitely like a cover in which I just covered and gave up. So not fun. So you can see stock squeezes through a little bit, definitely a little bit of a like emotional and like revenge trading at this point. I tried once again at 610s, then I realized it's just way too strong and I covered everything here at 620s. And at the bottom, you can see I realized a loss of $4,700, pretty much $4,800, almost $5,000 on the stock, if I'm considering the locate costs and everything like that. So definitely not fun. And you can see I've made so many mistakes trading the small cap stock. So going back to the trading view chart, you can see after I covered everything at around 630s, the stock actually went even higher. From 630, it went all the way to 8 because I guess there was a lot more shorts that stuck. And if you're too stubborn and you don't cut it, you're gonna get squeezed all the way to $8. And sure, you can see it came all the way back down from 8 to 5, but nobody could have predicted that. I didn't know that. You didn't know that. This thing could have went from 6 to 8 and to 10 or $20. So that's the silver lining on this terrible trade I did. Even though, yes, I lost $5,000 and it's not very fun, but I definitely learned a lot from this one trade. If I did not stop out, finally, after trying a gazillion times at 630, I would have gotten out right here at $8, and that loss wouldn't just be $5,000. That could have been $10,000 or even $20,000 if I kept on adding all the way to the top. Obviously, it's never fun to lose money, and it still hurts looking at the trading recording of my loss of almost $5,000. But I'm glad I realized that I was getting very emotional and I stopped trading this ticker altogether. Back in summer of 2021, I was trading Moderna stock. I had been trading this stock since the beginning of the pandemic, when it was only $20. Due to the pandemic and the need for vaccine production increases and the Moderna name becoming a well-known household name, the stock had doubled and quadrupled and went as high as $200 and eventually almost $500. Until then, Moderna stock had been a consistent money maker for me, and this time around was no different. I knew for a fact that as soon as I got into this trade to buy the dip, the stock is not only going to the moon, but going to Mars on a Tesla Roadster, and it was going to make me so rich that I was going to buy out Twitter and take it private. Well, I think we all know what had happened next. Clearly, Elon outbid me by exactly $43 billion and maybe a little bit more. No. Instead, what happened is that Moderna stock tanks huge from $500 down to $370s in 2 days. This is a crash of more than 30%. This is some penny stock level of a dump. And I was staring at my screen for a whole lot of big loss. I was definitely very angry. This trade wasn't supposed to go this way. There are so many reasons that this resulted in a huge loss. My slip up of risk management, breaking my own rule of revisiting a trade after 3 losses, trading midday, and I just broke so many other rules that had kept me safe for so many years. But due to the rage and the hostile state of mind I was in, I blamed the stupid stock market. The market is rigged, it's the greedy market makers and the institutional selling. And I resorted to eating a whole carton of ice cream by myself, and I wanted to slap Chris Rock across the face. Sorry, Chris, don't take it personally. As a trader, I'm always vulnerable in the ever-changing market volatility, and of course, vulnerable to my very own emotions and how I might act in the market. And my loss on Moderna stock reminded me how vulnerable I could be every single moment in every trading day, and that really felt awful. So choosing anger could act as a convenient escape from feeling vulnerable. Feeling anger feels more powerful and, ironically, more in control at the moment. As weird as this sounds, rage and hostility were the opposite of feeling vulnerable. Feeling angry is not always a bad thing. It's a negative emotion, but it's natural for us humans. Anger does have a purpose to protect our raw feelings, but we just have to be careful in recognizing that the feeling of power we get from feeling angry is really temporary. And at the end of our rage, we might be feeling worse off than before. So we really owe it to ourselves, our loved ones, and also our trading account's sake to recognize that anger is just the tip of the iceberg, and that there is a whole lot of other stuff going on inside. Like we mentioned in the last video, you have to allow yourself to feel all of these emotions and recognize them as they come. Always using anger to mask off our true feelings of vulnerability inside, it's a never-ending negative cycle that could often spill into our daily actions. It could lead to lashing out at innocent people, substance abuse, and of course, revenge trading, and losing even more money, which then would restart that anger cycle again. If you've had similar experiences when it comes to that feeling of a deep-rooted anger, like I did, or even just uncontrollable emotion, a good starting point to all of this is to recognize that there's a cycle to all of these emotions. Anger management professionals refer to this as the aggression cycle. Remember, the bad feelings have to come out before the good ones can come back in. And the best way to start this process is to attempt to understand yourself and know what you are truly feeling. Write it down in a journal like the exercise we mentioned in the last video. Talking to friends or loved ones that you can trust is also a good starting point. And if you don't have one of those in your inner circle, there are support groups for that as well. If you're struggling out there, just know that you are not alone. And remember to take these steps one day at a time. Feel free to share your stories with me in the comment section below if you're comfortable. I hope that my story somehow made a small positive impact on your journey. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time. So you just watched a highlight reel. Make sure to learn from the full interview video over here. And if you enjoy these highlight clips, there are many more profitable lessons that you can learn for free from these experienced traders. Check this playlist right here.